Hey there, random internet strangers. It's Random Crypto Guy, and today is May 2nd, 2021, and I'm here to share my signals for dollar cost averaging beast mode and the explanation on how to accomplish this. The pinned tweet. You can find my signals every week at Random Crypto Guy at Forex_random on the pinned tweet, and it happens every Sunday morning. Today's signal, let's just get right to it. These are the signals for this week. For Bitcoin, your dollar cost average signal is 82.7%. And for ETH, it's 53.6%. Your buy the dip escrow is 14.3%, and your buy the dip escrow for ETH is 39.4%. And your all-in escrow is 3% for Bitcoin and 7% for ETH. Now, what these mean for your dollar cost averaging, we're suppose that you have $100. 82.7% of that is going to purchase Bitcoin right away. 14.3% we're going to save in dollars off to the side in an escrow account that's going to build week by week, and then when price dips down, we're going to take a percentage of that out and purchase Bitcoin with it. And as we accumulate more and more, those numbers will get higher and higher, and the deeper the price drops, the more that we will pull out when the buy the dip signal occurs. But because there is no buy the dip signal, because we're in a ranging market, you are going to just set some money aside, some cash aside, so you have some dry powder to buy the dips. The all-in signal is 3%, and what that means is the remaining portion of your dollar cost average. If you take 82.7 and 14.3, you add those two together, you're going to get 97% with 3, so that leaves 3% left over that you're going to set aside into another cash account. And this is going to buy when we're at a deep discount price. So we have two escrow accounts that are accumulating dollars, one to buy little dips and one to buy the big daddy dip of them all, which on average they happen about every 2 to 2.5 years. And so the same thing happened here with Ethereum. Now Ethereum has gone up in price much more than Bitcoin has, so the DCA is much less. You can see it's 82.7% versus 53.6%. That's because we still want to be in the market, but we don't want to be chasing the market. We want the market to come to us. So we're going to set aside that buy the dip, these buy the dip escrows. We're going to set aside a little bit more money as opposed to that. And my algorithm it computes this to percentages of what you're going to set aside. So for your DCA is 53.6%, then you're going to set aside 39.4% in dollars to buy a dip when the price drops, and then you're going to take a percentage of that out depending on what the algorithm tells you to do. And then the all-in escrow is at 7%. So we're taking 7% of our DCA, and we're going to set that aside for that deep discount once in a blue moon in a bear market where prices are just super cheap, where they're ridiculously suppressed. So and as I said, well, for Bitcoin on average it's about 2.5 years. There's only been 1 or 2 all-in signals on ETH so far. So because it's a much younger asset. So moving on to the calculation, I'll show you how to calculate this. In our examples, we're always going to use $100 as our dollar cost average. It might be different depending upon your circumstance. Maybe it's only $60, maybe it's only $20, maybe you're rich and you can do $10,000. Okay, so but for simplicity's sake, we're going to use $100. That is how much money capital we have to purchase week by week. We want that to be consistent, whatever you can consistently purchase. So for Bitcoin, the DCA is 82.7. So we take our 100 times 82.7%, and that's $82.70. That's how much Bitcoin we are going to purchase today. So we'll set that off to the side. Now the by the dip escrow is 14.3%. So we'll take our $100, and like I said, it's going to be different depending upon what your financial situation is. Multiply that by 14.3%, and that equals $14.30. So we're going to set aside $14.30 into that escrow account. If you're using BlockFi, you'll be earning interest. You'll be earning 8% interest on that account. And if you have any questions, I can show you how to set this up. So we're done with that. We'll move on to the all-in escrow. So that's 100 times 3% equals $3. So $3 is going to get set aside into the all-in escrow week after week, and that'll start accumulating and growing, so that when we get that bear market crash and prices are super depressed, then we can buy a whole bunch using our all-in escrow. And like I said, on average it's been about 2 years, about 2.5 years for Bitcoin. So for Ethereum, I'm going to do the same thing. We have $100 times, and the signal is for the dollar cost average is 53.6, so 53.6%, that equals $53.60. And as I said, it'll be different depending upon your weekly allotment, total weekly allotment. So $53.60 is going to be purchase Ethereum today. By the dip escrow is 39.4. So we'll take our 100 times 39.4 equals, oops, clear, my bad. Let's try that again. 100 times 39.4%, forgot that part, is $39.40. So we're going to set that aside into our by the dip escrow, and that'll collect interest. If you're using the BlockFi account, it'll collect 8% interest, and then when price drops, we can take a percentage of that total escrow that we build up and purchase Ethereum with that. Clear out. And the final is the all-in, so that's 7%, so 100 times 7% equals $7. So $7 will go into the all-in account, and that'll start accumulating to purchase Bitcoin in a bear market during a crash, and on average about every 2 years that happens. So you'll see, if 2 years, these $7 here, $3 there, that'll add up to a couple $100, maybe even thousands, depending upon how large your dollar cost average is, and that will be a lot of money that you'll have set aside, plus it's earning interest in if you hold it in a BlockFi account. And then when those suppressed prices come, boom, we can buy a whole bunch of it. We got lots of dry powder set aside just for that purpose. So that's what these signals accomplish. Moving on, let's go to the charts and let's take a look. You can see Bitcoin is showing some ranging behavior, and I'm a little concerned about it. Last week we had a buy the dip signal, but it was only a 1%. That was when it was down here in this area here. So we took 1% of our buy the dip fund and purchased some Bitcoin with it. But we don't want to do it all at once, because honestly we don't really know. We're in this for the long haul, and we don't know if this is going to go up forever. And as it sits right now, you can see we've established a lower low, and we are threatening to establish a lower high, which it would be a downtrend on the daily. And that's not a death sentence for Bitcoin, because we're long-term hodlers. We could see a drop as low as 39,000 and still be okay in the macro respect of things, and that would be, looks like a good opportunity to buy. You can see lots of stacked demand here. So that's why we only took 1%, because the chances are still pretty good that we are going to continue. There's a possibility that we can continue to drop. That doesn't mean it's going to. It's just that honestly the odds right now are around 50-50. If you want to take a look at it, the odds are good that we're going to go up, because we got past the pivot that I talked about last week. But this is kind of a bull trap area where people could get stuck in here and then come crashing down. And as I said, this area is not that strong of a support area. This is a little bit stronger down here at 39. So, but even this support here is looking pretty good. And if this drops pretty quickly, if this holds, then this would be another good buying opportunity right around $49,000-$50,000. So we don't want to do it all at once. That's the whole idea behind saving that dry powder. Now Ethereum, on the other hand, has been on an absolute tear. So it's a strong uptrend. We got some solid demand down here at 2200. Don't look, it's going to take a big drop to bust through all that demand. There's a lot of buyers willing and waiting to buy at that level. So we want to set aside some money, so we're starting to get extended here. We can't go green forever. I mean, we've gone some green for some long time. That was several days here, a couple of weeks, or nothing but green candles before we finally got a chance to buy the dip. And then another chance here. There were several green, but we had a couple red days, but nothing that probably would have tripped the algorithm to buy. But this definitely would have been a buying opportunity here. And so this, we're just going to wait and start setting some cash aside to buy when it does drop. And that way we stay out of drawdown, levels out the volatility. So in review, dollar cost average beast mode signals for Sunday, May 2nd, 2021. Bitcoin, your DCA is 82.7, your buy the dip is 14.3, and your all-in is 3%. For Ethereum, the DCA is 53.6%, buy the dip is 39.4%, and the all-in is at 7%. And you will find these pinned, maybe my pinned tweet at Random Crypto Guy. It's completely free. All I ask is that maybe if you need a BlockFi account, a Celsius account, Coinbase account, a wallet, that you use my links. And so thanks for stopping by.